I've spoken a lot about dividends and dividend stocks on this channel prior to this video, and so if you haven't seen some of those videos yet, I'll link them down below. But of course, don't watch them until you're finished watching this video. Dividend stocks are a popular investment choice as they offer a nice deal of passive income to the shareholder. Some investors strictly only focus on dividend stocks specifically and will not buy a stock unless there is a dividend to be offered. Now, there's really two areas of focus when it comes to investing in stocks with dividends, and that is dividend growth and whether or not it has a high dividend yield. So like a growth stock, which is defined by growing earnings, a dividend growth would refer to whether or not the stock has a trend of increasing dividend growth, whereas high dividend yield stocks may or may not increase their dividends on a regular basis, but they do show the fact that they are distributing dividends that exceeds the market average. So whether you are looking for dividend growth or high yields, in this video I'm going to be covering 4 reasons why you should invest in dividend stocks. Number 1, the psychological advantage of income. When you own a company that distributes some of its profits in the form of a cash dividend, it becomes a lot easier to focus on the things that truly matter when it comes to investing in stocks. This includes look-through earnings, so you're not as concerned with the volatile ups and downs in the market, and especially right now we are seeing that. You can focus on the connection between the success of the enterprise and the money that flows from the corporate treasury into your hands. So this in turn will encourage investors to utilize a buy and hold strategy that I've talked about so many times on this channel. This reduces frictional expenses and increases the odds of being able to take advantage of things like deferred tax liabilities. You'll also be able to benefit greatly from the stepped up basis loophole. It may not sound like a tremendous advantage, and we might be so focused on the ups and downs and little trends during the day, but it has been shown time and time again that focusing on the long term benefits investors the most. Now, this isn't to say that you should just buy any dividend stock out there, and if you just see a random stock that offers a dividend, you should buy it. That does not what that means. This means that you should do your analysis, do your research on that stock, on that company, to make sure that the chart does look good, you are going to be making consistent dividends, and you'll also see an appreciation with the stock itself. And reason number 2, cash commitment reins in unnecessary spending. Dividends usually represent a major cash commitment for the company. It is less common, but some companies do offer direct stock as opposed to cash as their dividends, but usually you're going to be seeing cash paid out to investors for dividends. So these are cash payments being dispersed regularly by the company, whether or not they're just a credit to the brokerage account or an actual check in the mail from the company itself. So this helps to reduce the amount of cash sitting in corporate coffers. So while investors do want a company to have cash flow, too much cash on hand could end up burning a hole in the pockets of executives. And this cash could end up being paid out as bonuses or higher salaries. It could even end up being paid out as golden parachutes or guaranteed payouts to executives who are ousted from companies. So these payments are definitely great for the people that are on the receiving end of them. However, in a hypothetical scenario, shareholders and investors do not benefit when the company spends millions paying a CEO who was just fired from the company for a scandal that caused its stock to tank. Dividends take priority over bonuses and salary hikes. They're definitely no guarantee against corporate mismanagement or excessive spending, but it does help executives and managers to be relatively more selective when it comes to their spending. And reason number 3, yield support helps reduce bearish momentum. So aside from the straightforward dollar amount, it's also common to measure dividends by calculating the 30-day SEC yield. This simply states the dividend payout as a percentage of the cost per share. For example, if a company issues stock at $100 per share and annually they ended up issuing $3 per share for the dividend, that yield would be 3%. And like I said, a 3% yield does sound good and is pretty good, but now imagine if the stock market started to slump. In this particular example, the company isn't spared from the slump, and now it drops to $50 per share. The stock just lost 50% of its value, but it still pays an annual dividend of $3 per share. So in that scenario, the yield effectively doubles in size. So an investor in an overall slumping economy may seek out the stability of dividends, and now in this scenario, the company now pays a 6% yield. This would help attract investors, thereby slowing the stock value's fall. Now, other factors do come into play, like whether or not the company has a history of cutting dividends. If the company does have a history of cutting dividends in the past, investors may not be very confident that the company will maintain that 6% dividend yield. An excessively high dividend yield could actually detract investors in some scenarios. This is because the company may cut the dividend and slash it, or they'll ultimately lack the cash to pay it out. But those concerns aside, a yield support helps slow a stock's fall and stave off the worst of bear markets. And finally, reason number 4 why you should invest in dividend stocks reinvested dividends accelerate returns. It's no secret high dividend yields are very attractive to new investors especially, but those dividends are often reinvested by current shareholders. This effectively and ultimately benefits themselves and the company in the long run. Especially when a stock is at a relatively low point, reinvesting dividends could benefit every party. It serves the dual purpose of slowing downward momentum and acquiring relatively cheap shares. Investors could either manually reinvest their dividends with the cash that's credited to them, whether it be by check or into their account, like I said, or they could actually set up DRIP or a dividend reinvestment plan. And again, those videos will be down below. I talk about DRIP and how dividend reinvesting can be very, very lucrative for you. Most market analysts are strong proponents of the benefits that come with reinvested dividends. There was a case of the Altria Group, or also formerly known as Philip Morris. Public sentiment and lawsuit settlements kept the tobacco producer's stock price deflated despite consistent profit. So for shareholders who held on and reinvested their profits, they enjoyed some of the largest returns of any public company in history. And by one analyst's calculation from the years of 1957 to 2004, Altria was the best performing company for investors. So it shows you how dividend stocks could be very, very valuable, but like I said, do your research, make sure you're investing something stable with a long history and track record of dividends in the past. Now you can easily see, just with a quick Google search, to see whether or not a stock does offer a dividend. Some stocks only offer dividends once and here and there, and it's not actually a set schedule, while others do offer it quarterly. And so you can see how much that yield is and what that payout will be, and when you have to be invested in the stock to receive that dividend. You can see all those details just by looking up the ticker symbol online. Especially for newbie investors, dividend stocks can be a great investment option for you, and you're going to want to look at maybe some blue chip companies that have that long proven track record, the big FANG stocks or the big MAGA stocks as they're calling them now. But I do hope you enjoyed that video. If you did, if you got value out of it, share it with a friend, give it a big thumbs up, smash that like button. And if you'd like to see more videos from my channel, I post videos every single week without fail covering business, finance, entrepreneurship, mindset, strategy, and tips and tricks. I post videos every single week. You're not going to want to miss a new one. Be sure that you subscribe and also hit that little notification bell as well so that we're notified every time I make a new one. See you in the next video.